Cast is now
You
starting.
can
All
join.
attendees are in listen-only mode.
Good afternoon, everyone. My name is Joe Bicella, Director of Client Success here at Chaikin Analytics, and I'd like to welcome you to 5 Keys to Finding the Best Stocks in Any Market. Our presenter today is Sandy Chaikin, co-founder of Chaikin Analytics. A little bit about Sandy's background. With no prior experience, Sandy started investing in 2012 with Chaikin Analytics and built a killer portfolio that outperforms the S&P 500 and most money managers. Sandy is living proof that you do not have to be a financial expert to pick winning stocks. She presents webinars and speaks at industry events on fearless investing by following the Chaikin 5-step method. Sandy is a contributor to NASDAQ.com, where she also hosts webinars on investing. Prior to co-founding Chaikin Analytics, Sandy had her own marketing and communications firm in a career that spanned over 30 years. She's held senior management roles at Elizabeth Arden, L'Oreal, and the Franklin Mint. She is a member of Elevate, a global professional women's network, and Women in Investing Network of Philadelphia. Now, throughout this presentation, please submit your questions through the GoToWebinar chat window. Michelle Greenblatt and I will be available to respond to your questions. As a reminder, this webinar is being recorded, and a copy of which will be sent to everyone who has registered. Now, to get us started, I'll turn it over to Sandy Chaikin.
Joe, thank you so much, and welcome to everyone, including the Atmos and Options Moneymaker community. We're very beholden to Adam for including you all in this webinar and extending the invitation to you in addition to our Chaikin community. So welcome. So as Joe said, I am living proof that you don't have to be a financial expert to find winning stocks. I invest my own money, my 401k plan, and in my presentations I use examples of stocks that I've actually bought, sold, or am considering. So it's really like looking over my shoulder and seeing how I do this. And as Joe said, in less than 4 years, I've been investing now in stocks in 4 years, I've been outperforming the market ever since I started investing with Chaikin Analytics 4 years ago. Excuse me. Prior to that, I was strictly in mutual funds. So my whole goal today is to show you what I do and how I do it, so that you can walk away from this presentation with the confidence knowing that you can do this yourself. And do you want some stock ideas? Most people, when we ask that question, say yes, yes, yes. So I will be giving you specific stock ideas. I suggest you get out a pad and pencil and so you can write them down. But you'll come away from this not only with how to do this, but with some specific stocks to get started on to look at. So, are you ready? Let's get started. First, I have to get this little disclaimer out of the way in that Chaikin is not registered as a broker-dealer or investment advisor either with the SEC or with any state securities regulatory authority. Chaikin does not recommend the purchase of any stock or advise on the suitability of any trade or investment. The information presented in this webinar is generic in nature, is not to be construed as an endorsement, recommendation, investment advice, or any offer or solicitation to buy or sell securities of any kind, but solely as information requiring further research as to suitability, accuracy, and appropriateness. Users bear sole responsibility for their own investment research and decisions. So I'm asking you, have you ever wondered, what's the secret to building a killer portfolio and becoming a more successful, confident investor? Well, that's what we're going to be talking about today, and I'm going to give you the 5 keys to how I've done it. And as I said earlier, you're going to walk away after this presentation knowing what you need to do to be a more confident and profitable investor. But I always like to start with the problem. What are we all faced with today? What are our challenges? Well, I know the volatility, is always big in the news. It has been for some, 6-7 months now. And there's always been a lot of talk and even some kind of creeping back into the conversation about bear market and all this. Well, according to First Trust, who is a partner of ours, They've done research that shows that each year you can expect the market to experience significant corrections, on average 14% over the last 30 years. And their findings are that those who stay the course were rewarded more often than not. Staying the course meaning not going into cash, but staying invested in equities. And this little picture kind of diagrams it. So in February 11th here was when we hit the low, and that was actually 14% lower than the high last May. May 2015 was a high, February 11th, 2016 was the low. However, since that February 11th date, we are now up 18%. As of a couple of weeks ago, we were up an even 14%, which was pretty remarkable, seeing that that was, they said the average was. But as we all know, the last couple of weeks have been really good growth, so we've gone up to an 18% difference. So you can see that this is normal. I mean, this is nothing to be concerned about. So you really have to put aside the news and the doom and gloomers. Remember, they've got to fill a news cycle, you know, 24/7 practically, and many channels of news and financial news takes up that. They're looking for stories, so they have to create an audience, but it's not always steering you in the right direction. But let's look at where the S&P, because I always compare myself to the S&P 500. That's kind of the benchmark against which I and most investors gauge their performance. So the S&P has grown an average of almost 10% over the last 20 years, but individuals have only averaged 2.5%, which is a huge difference between 10. And that's because people tend to buy on emotion, not fact. Add to that 81% of actively managed mutual funds are underperforming the S&P 500. And in fact, it's not just Bank of America who put this out, said this was so for the last quarter, but they've actually underperformed for 13 out of the last 14 years. And on top of that, you pay, you know, a hefty fee. You typically pay 1.5% fee on top of their underperformance. Bonds, on the other hand, are less, you know, aren't helping you either. They're at under 1.5% or so yield, and they recently hit record lows. So where do you put your money? I mean, cash, we know cash isn't the place to go because that actually decreases every year when you factor in inflation. Our solution is to invest in stocks, and not just to go with the crowd and go with the herd and buy the most popular stocks on the S&P 500, but to find what I call these hidden winners. And this is how, these are the stocks that I buy. And actually, I've been in all of these stocks that you see here. Probably have never heard of any of them. I hadn't either before I bought them. These are not household names. Yet this is where I've found you can really make your profits. For instance, some of the stocks that I'm in or have been in have realized this type of performance year to date, while the S&P is up 6%. It's better than it has been. It was running about 2% until a couple of weeks ago for the year, but now it's up to 6%. But look at these gains. I mean, wouldn't you love to be in a stock like QUAD Graphics? It's up 182% this year. Or a little lawn care company called Centa, up 81%. You know, this is all possible. This is what I'm going to be showing you today. And all this is so you can profit. Now, I also ascribe to what Warren Buffett has said about investors. To quote him, he says, investors should be fearful when others are greedy, and greedy only when others are fearful. So what does that mean? What he's saying is that when you should be fearful, meaning you shouldn't buy, when others are greedy, that means when others are buying. So when prices are going up, that's when you want to just stay lines and wait for them to kind of fall back down. Because if you buy when everybody else is buying, you're going to be paying more for a share of stock than you could if it were in a less favorable time frame. What he means by being greedy only when others are fearful, they sell, right? I mean, if you're afraid, you either freeze and don't do anything, or you sell because you're afraid of loss. And that's the emotion, that gets into investing and trading, which is so detrimental to our returns. So what Warren Buffett is saying is that when others are selling, when they're all leaving, for instance, the Brexit vote, do you remember that? June 24th was the day after that Brexit vote, when stocks were down 4 or 5% and another couple of percent the next day, because they were all fearful that the fact that Great Britain voted to get out of the Union was going to cause a problem in the stock market. I mean, how are those two related? It's ridiculous. The vote, even though they voted to stay out of that union or get out of that European Union, it can't take place for several years. So nothing's going to happen, at least for a couple of years. Yet people were afraid and they sold. And that's when Warren Buffett is saying that's when you be greedy. And I was greedy. I'm proud to say I was greedy. On June 24th, I bought stocks because they were basically on sale. They were dropped down because there was a flood of product on the market as people were selling. That's what you want to find, and that's what we're going to be doing today. That's exactly what I do. So this is a little bit of an example of a stock, Centa. I alluded to it earlier. They have garden supplies and as well as pet supplies. And I got into this stock back here when it was about 17, and then I sold it when it was up here, when it was about 21. It's gone up since then. Unfortunately, I didn't stick with it. I thought that was great, taking that profit when I did. But I'm going to show you what all this means here, and how I knew to get in here, and how I knew to get out there. So this is just an example. But if you want to start your stock idea list, put this one down, Centa. So my promise is that you're going to discover how to find the best stocks in any market, whether it's a Brexit market, people being fearful, or whether it's a raging bull market, and how to find them quickly and easily so you can become confident investors and not fearful investors. And all this is so we can make money. And the reason to make money, the benefit of making money, is that you can use it on things you enjoy and celebrate. Mark and I like to travel, so we've taken some great trips thanks to the profits that I've earned with Chaikin Analytics investing in stocks. A couple of years ago in the summer, we went to Turkey, which is the slide you see, the picture you see up here at the top, overlooking the Aegean Ocean. Thank God we went then, because we certainly wouldn't be going to Turkey now, but a friend of ours daughter got married in Istanbul, and we went over there and extended the vacation to the coastline as well. Last year we went out to Vail in Colorado for a performing arts festival, because I'm a big fan of modern dance. And then recently, as recent as May of this year, Mark and I went to Rome for a week and enjoyed the great dining and sights that Rome has to offer. So think about how you would celebrate. Think about what you would do with your profits. I mean, obviously you want to set some aside for your retirement and stash them into your 401k plan, but also you want to celebrate along the way. So think about how you would spend those profits. So why should you listen to me over this next hour or so? Well, I've beaten the S&P 500 for the last 4 years, since I started investing in stocks in 2012. And by the research showing that 80% of wealth managers underperform the market, that means I'm beating 4 out of 5 pros. Last year, I found little-known stocks like American Woodmark, up 98%, and Activision, up 94%. And this year, for instance, I found stocks like Centa, which I just showed you, up 81% this year, and a small company called QUAD Graphics that I'm in that is up 182% a year. And I spend 15 minutes a day. So as I said in the beginning, You don't have to be on this 24/7 to be able to master this technique. I literally do spend 15 minutes a day looking at my stocks. Part of that is because I limit my holdings in my portfolio at any given time to about 8 or 10 stocks. And then I have a watch list of stocks that I put on there. And I flip through the charts on those two lists every morning and every afternoon and see what's changed. And that's basically my 15 minutes a day maintenance to maintain a profitable portfolio. But let me take you back for a little bit so you kind of understand where I'm coming from in terms of investing. I got introduced to investing when I was working in New York City for Elizabeth Arden and then L'Oreal, who both had 401k plans. And then when I went to the Franklin Mint outside Philadelphia, they too had a 401k plan. And those plans offered a choice of mutual funds to invest in. And I was fortunate that Fidelity and Legg Mason funds were two of the funds that were offered. So I was in Fidelity for quite a long time. That's actually been the best performing fund in the world. I just really got lucky with this one. But Peter Lynch, you may have heard of Peter Lynch, he managed this for over 20 some years, and it averaged 29% a year. That was great. Legg Mason also had a good run with Bill Miller's Value Trust. So that worked okay too. But as my career grew and as my 401k plan grew, I felt that I didn't have the time or the knowledge to manage this very well, and also the fund was growing. And as I was making more money, I was putting more money in, and the fund was compounding on its own. So I felt it's really time to get a professional to manage this, because it's kind of, I always felt it was just, investing was way too complicated for me to understand. So on the strength and recommendation of a friend, I engaged a portfolio manager who took over the account, sold the mutual funds that I was in, and put me in about 8 or 10 funds of his choice. So then along comes 2008. This needs no explanation. I called him several times, more than several times, going back as early as September. I mean, I remember where I was when I made that call in September of 2008, when the market was dropping 500 points that first day of the the waterfall decline. And I said, gee, everything's clearly going down here. Don't you think we should sell these funds and just put the money aside in cash? And the response always was, no, I don't advise you to do that. They'll all come back. It's better just to hold on and not sell. So, 6 months later, the portfolio was down 40%, and still was. I was pretty devastated. So I just felt that the advisor was not sensitive to my concerns, and I took the money out of his care. But it was a really traumatic time for me in my life, because I had worked so hard to build this fund up, and then to see it disappear by 40% was pretty devastating. On top of that, just to share a little personal anecdote here to my background, I had a very fortunate growing up. Outside Philadelphia, my parents built this house, which I grew up in, and we had a beautiful boat. We kept at the shore, and down in Florida during the winter, had a house on the beach of Manaloking. And we took pretty nice vacations, but all this changed when I was in college, in my junior year in college, when there was some severe financial reverses due to an investment my dad had invested in. And so that was when everything changed as well. And I finished college on a scholarship, and that really caused me to feel like, boy, no matter how secure you think you are, things can change in a heartbeat. And things clearly had changed in a heartbeat. So I really resolved myself at that point to work really hard to build up a career and to be very fastidious about putting money aside. So to see that lose 40%, it was really, I don't even like to talk about it because it was such a devastating point in my life. But it was a turning point, and it resolved me to take control. You know, as it had resolved me back in the early 70s to be self-sufficient, this was a turning point as well when I said, okay, you know, I've got to take control of my finances. I've got to learn how to do this because really nobody's going to care more about my money than me. So let me pause and just ask you all if you'll just chat into your window there if you've had a similar situation with 2008-09 with that kind of meltdown. Lots of yeses. Annie, Paul, Jeff, George, Doc, Bill, Larry, been there, done that. Peter, Dino, Jack, Greg, Kevin, luckily no. Good for you. Naomi, Jim, Gerald. Went to cash in 07. Right, good for you. Didn't get back until too late. Well, see, that's the problem with going to cash, is you never know when to go back in. Yeah, Eric, train wreck, 2008. So unfortunately, a lot of you have had a similar experience. So did that say to you, as it said to me, boy, you know, we've got to figure this out. You know, we've got to take control of this. And even though we of us do use advisors, and many of our subscribers are advisors, we encourage individual investors to know enough about stocks and investing to have a conversation and be a part of the conversation. So even if you don't want to take like full control of yourself, you still want to maintain it with the oversight of an advisor or another trusted source. That's fine. But what we say is, you know, you really need to understand how the market works and to be involved in your investments. So let me also ask you here what kind of challenges you're facing today. That was then, this is today, so we're moving forward. But if you're not profitable in the market right now, or if you're not as profitable as you'd like to be, what is it that's holding you back? You know, I typically get, you know, volatility in the markets. People don't know when to time their entries or exits, lack of confidence, information overload. I mean, just if you would chat into your window there, the things that are holding you back from being as profitable and confident as you would like to be. All right, Brittany. Brittany says she doesn't feel she has enough education to make investment decisions. We're gonna give you that confidence today. All of the above: information overload, confidence in timing, info overload. Mark says he's bad at cutting losses. Yeah, that's always a big one. That's one of the most difficult things, I think, for most investors is the time, the exit. Gary says good investment ideas. Anthony, knowing when to get in and out. Brian, pulling the trigger. Yeah, that's that conviction. That's the confidence that you need to have in order to pull that trigger with conviction. Kevin, too much information. Everyone is selling something, right? Jack, still learning. Craig, getting my feet wet, sort of speaking, interested in options. Well, we do have options overlay with Chaikin Analytics. I do not have time to go over that today, but Joe has mastered that and gives sessions several times a week to our subscribers on how to use Chaikin to trade options. So I think I'm hearing the same thing from all of you, which is basically, you know, fear, lack of time, lack of confidence, lack of education, information overload, timing. You know, timing's a big one. All right, well, thank you all. That's a help. Well, this next hour or so, my presentation has been geared to address just that. So I will address each of those concerns and solve that challenge for you so that you can move on, move beyond it, and not be impeded by it. So the 5 steps we're going to talk about today, I'm going to break them down into these steps using a methodology, knowing what to buy, investing only in strong stocks in strong industry groups, knowing what to avoid, and knowing when to buy and when to sell. That's the big timing issue that many of you cited as your challenge. So this is all going to be on our workstation, which we call the Financial Freedom Fast Track, powered by Chaikin Analytics, available on desktop and iPad. The screens I'm going to be sharing with you now are from the desktop version. So let's get right into the first key to success, which is to trust a proven methodology. Now, the methodology we believe in is the Chaikin Power Gauge rating, which looks very simple here, doesn't it? I mean, it's pretty clear, very bullish. It's a very powerful and reliable indicator of where a stock is headed over the next 3 to 6 months. My whole presentation today is really going to be centered around the Power Gauge rating. It's our secret sauce. It's what makes Chaikin different from any other subscription service or free service for that matter, too. But the Power Gauge rating takes 20 factors into a model with an algorithm that then crunches all those numbers and spits out this very simple display of a very bullish or a very bearish rating on any stock. So it looks pretty simple, doesn't it? What it does is it cuts through the clutter. So many of you said information overload was one of your challenges. No doubt, it's a challenge of all of ours with the amount of financial news and data streaming at us all day long through emails, texts, television, etc. It's pretty hard to keep track of it all. But this cuts through all that clutter, takes what can be very complex, and boils it down to a very simple display. So there's a lot more going on that meets the eye. These are the 20 factors that make up the Power Gauge rating. As you can see, they're divided into 4 basic components. And the way this all came about is that Mark and I got together shortly after that whole 2008-09 meltdown. And he could see that I had taken my money out of the control of the broker and put it into a self-managed account at Vanguard. And I parked it into a S&P 500 fund until I could figure out what to do with it. And he realized that there were literally billions of dollars just streaming out of traditional brokerage firms going into self-managed accounts like mine at Vanguard and elsewhere. And he said, you're now managing your own account, but you really don't have the education nor do you have the tools to make good decisions, which was absolutely true. So he said, well, what I'm going to do is I spent 40-some years on Wall Street creating tools and indicators for professionals so that they can make better decisions for their clients. I'm going to take, the best of the best, exactly what, worked the best, put that into a model and give that to you as individuals in a very simple display that you can easily understand. And that's the genesis of the Chaikin Power Gauge stock rating. So here you see the 20 factors that make this rating up. Financial metrics component is something more of an investor like a Warren Buffett would look at. I highlight price to sales because there are 3, price to sales, short interest, insider activity. These are the 3 factors that I really drill down on. Other than that, I'm happy with the overall rating and the overall, component rating. But you can drill down and get a Power Gauge rating on any of these 4 components as well as any of these 20 factors. Price to sales, why is that important? Well, that is the ratio that compares a company's stock price to its revenue, an indicator of the value placed on each dollar of a company revenue. There's a lot of companies that are very overvalued, And it'll show that up in this price to sales ratio being bearish. And that means if there's something that happens, if they come out with a poor earnings report, or something happens that triggers a stock to fall, there's nowhere to go but straight down, and they cascade way down. So I always want this price to sales ratio to be bullish. The other two factors that I zero in on are short interest and insider activity. The short sellers are known to be the smartest guys on Wall Street, guys and women on Wall Street. And they'll short a stock expecting it to go down. So it's kind of a flip-flop here. But if the short interest is bullish, it means the short sellers aren't selling that stock. I don't want them selling a stock before they own it, betting that stock's going to go down if I'm interested in buying that stock as a swing trade or as a long trade. Insiders activity, this is really an important component too, because insider buying is available elsewhere, but insider activity means that they are, I'm sorry, insider selling is more common to find. But insiders could sell for a number of reasons. They could need like tuition payment. They could need a down payment on a house. I mean, there could be numerous reasons other than their outlook on a stock as to why they're selling it. But they only would buy a stock for one reason, and that's because they think that stock's going to go up. So I want the insider activity factor to be bullish when I'm evaluating a stock. And other than that, as I say, I really look at the overall rating. Now, the Chaikin Power Gauge rating has gotten some great kind of testimonials from our partners. We've partnered with NASDAQ and created indexes based on the Power Gauge rating. So what we did was we took 3 indexes that were existing on their, within their framework, within their stable of products, and they asked us to overlay the Chaikin Power Gauge rating on the stocks that made up those indexes and filter out the neutrals and the bearish ones, which is what we did. So now for over 2 years, we've got a running history of these Chaikin NASDAQ indexes, which are clearly outperforming the benchmarks, meaning those that are in their stable. First Trust then came along and saw these NASDAQ indexes and tested the Power Gauge rating on their own, and they felt confident enough about it that they asked us to create what they call unit investment trusts, which are kind of like mutual funds, but they're kind of locked in for 15 months due to tax advantages. And they have a whole sales network that sells these unit investment trusts to money managers. So there's now almost $50 million under management in these First Trust Chaikin unit investment trusts. So these are one out of their 120 or so funds that they sell. These are like in the top 3. The Chaikin indexes are in the top 3 out of 120 products that their wholesalers are able to sell, because the power gauge rating is so reliable that these funds are outperforming the market. So that should give you some good confidence that the power gauge rating does a good job, and you can depend on it. It's reliable. We're also seen in the media. Mark's quoted practically every week on CNBC by Evelyn Chung in her column, which is always on the front page of CNBC.com. A number of hedge funds use us as well, depend on the Chaikin Power Gauge rating and the Chaikin Analytics, Soros, Paulson, to name a few. And if that doesn't give you enough ammunition to use a proven methodology or a model that you can trust, James O'Shaughnessy has this to say about models in general. And I love this quote because it kind of really zeroes right in on that emotional card that causes so much of us to have such pain. Models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. So, you know, all the more reason to depend on a model. Then you don't have to depend on your own feelings, somebody else's feelings, somebody else's opinion. You know, it's completely objective. You know, and that's the beauty of a model. Many of you said information overload and time in your challenge question. We get a lot of testimonials. You know, Cheryl here has said that there's not enough time in my day to do the work Chaikin puts before me in minutes. I am wowed. So when you think of that 20-factor model, think of yourself, how would you find those 20 factors for each, and what the outcome is for each of the stocks that you're monitoring or hold? I mean, you'd have to, I don't even know where I'd go for that information, let alone the time it would take to search this for every single stock. The power gauge rating literally does it in seconds. I mean, you can plug in any stock symbol and in seconds you'll get a rating. And then if you want to drill down, you can. Or if it's, you know, if it's, say, bearish and you're looking for bullish stocks to buy, you just skip it and move on. I mean, it saves hours of time. It also helps you with your sleep at night. Jim here says, after getting hammered in August correction, I decided to take advantage of what Chaikin really offers. That is a better night's sleep and some impressive returns. Rather than swinging for the fences, you know, that's trading on emotion, and striking out, I've learned to do what the system tells me, that's trusting the model, and therefore enjoyed my 16% return. Thanks to Mark, Joe, and the entire Chaikin team for giving my confidence and good night's sleep back again. And I love this quote because the confidence, you know, is always what I'm getting at, because if you don't have confidence, you're not going to pull that trigger, or you're going to make a bad decision. So having confidence is really critical. And the Chaikin Power Gauge and the analytics we offer, because they're reliable and they're unbiased, you know, they can really give you the confidence and a good night's sleep. All right, so let's move on to what to buy, key number 2. But I just want to pause here and ask if you are all good with the power gauge rating, because it is the foundation of everything I'm going to be talking about. Including, you know, how do we identify a classic bull. So I want to just make sure everyone's good to go on the power gauge rating. So I see Dino, Michael, Annie, Brian, John, Anthony, Jack, lots of yeses. Okay, very good. You guys get it. This is great. I will move on. Okay, what to buy? We classify a classic bull as a stock that has these following components. It must have a power gauge rating that's bullish. We want it to be have a relative performance that's strong. In other words, it's beating the S&P 500. It's above the S&P 500. And we want the Chaikin money flow to be strong. So what does that mean? Well, I'm going to show you on an example, but before I go to that example, I'm going to show you this chart, which was created some 90 years ago by a Dr. Wyckoff, and it charts the basic motion of a stock, path of a stock, I should say, as it goes up. Now, we don't go straight up, or they don't go straight down. They'll go sideways for a little bit, and they'll bump up, and then they'll pull back, and then they'll go up again. They go sideways. This is all normal. So it's important to understand this because this affects the timing. In other words, if you're going to be buying a stock, you don't want to be buying it when it's up here. You want to be buying it when it's pulled back. We call this a pullback here. Now, the pros call this accumulation, distribution, breakouts, throwbacks, all this stuff. I call it zigzagging. So basically, any stock that's headed in the up direction is going to have this similar pattern. Zigzagging across, it jumps up, pulls back, goes back up, zigzags, etc. So let's see that in action here. So here's a classic bull, Atmos Energy, another not exactly a household name. Let's evaluate this. This is a chart from the Chaikin Analytics desktop. Power gauge rating is this ribbon along the bottom. It's showing us the historical 12-month pattern. And it's practically green the whole time with very few little ticks to yellow, which is neutral. Relative strength, by it being green, is telling you this is outperforming the S&P 500. That's the SPY. SPY is the S&P 500 index fund. That's our benchmark. If you want to just have average returns, then just buy the S&P 500 and don't worry about investing in individual stocks. But as you're acutely aware, the performance has not been great the last couple of years. That's why it's important to know how to invest in individual stocks so you can outperform the S&P and you get above average returns. So you want this to be green. The Chaikin money flow is this kind of call this like kind of mountainous display here, and these big huge chunks of green mean that professionals are buying the stock. Now this, you'll note, is called the Chaikin money flow. This is an indicator mark created some 35 years ago on Wall Street for the pros, and what this does is it measures the institutional money coming in and out of a stock. And you can see in these periods of heavy green where they're buying it up, it pushes the price up because there's more demand and less supply. If they're buying a lot of it, you can see what happens. Even when other things stay constant, this money flow is so important in the way it moves the stock price that you can see it clearly on this chart. This is the average. This orange line is like a 200-day average, moving average. That's why it's straight. That's not the way the stock usually goes. So looking at the Wyckoff, remember, it kind of goes sideways here, goes up, back, sideways, 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 up, sideways. So you can see this whole zigzag pattern going. But obviously, if you're looking to buy a bullish stock, you want this price trend to be moving up, which is clearly indicated by this 200-day moving average. You want the power gauge rating to be green. You want the relative price strength to be green, and you want the money flow to be green. That's a classic bull. Okay, how did I know to get into this stock? Well, this had been on my watch list since late January, and I was just waiting for the right time to buy it. I waited for this little triangle here, which is a buy signal. These are triggered within our workstation. There are actually 6 pairs, each with different rules. This is called an oversold buy signal. And this triggered here back in, I think this was March, about March 1st. And so I bought it here, went across, kind of sideways. They reported earnings, they popped up. And shortly after they reported earnings, I took my profit and sold it at 74, making 8% in about 10 weeks. So since that time, the stock has gone up even further. And now, as you can see, it's still under heavy accumulation by the pros. The relative performance of the S&P is kind of dwindling. So I would put this on your watch list, for a stock. So those of you taking notes, put down ATO. But I would add the notation to wait for this relative strength indicator to turn a heavier green. It's kind of going into neutral territory here, which is why you see it's also going sideways. So I would wait for this to turn green before I considered buying the stock. Let me pause here and explain this overbought, oversold indicator, which is this zigzaggy thing along here. When you're buying a stock, and that's why these little triangles are really helpful. These are the oversold buy signals that trigger off of this. You want to buy it when it's down in this bottom part, underneath this zigzag line here. You want to sell a stock when it's up here. So as you can see, I bought this stock when it was down here, which correlates to the dip in its price, to the pullback or the throwback, as Dr. Wyckoff calls it. On the reverse side, you want to sell. When you're selling, you want to sell when the stock is up here. And you can see that that clearly correlated with this little spike up here where I sold it. So if I were to buy this again, I would wait for it to pull back here. If I wanted to buy it back, this would have been a great opportunity to buy it back. Or now, as you can see, it is starting to dip down again. But as I said, that relative strength would give me pause. But that's how you read this overbought, oversold indicator, which is really helpful with timing. All right, so how do I find these stocks? How would I know where Atmos Energy or Centa is to begin with? Well, we added something in the fall, late fall, called the screener. And it's not a very sexy looking chart, but boy, is this thing powerful. And this has been huge help to me and our subscribers in terms of saving enormous amounts of time. What this allows you to do is to take your criteria, plug them into this kind of grid here, and then it filters out, so you're left with only the stocks that meet those particular criteria. Remember that Power Gauge rating has 20 factors. That's 20 criteria right there that you can screen for. So what I do is I screen for those three factors. Those three factors in the Power Gauge rating out of the 20 that I highlighted in red: price to sales, short interest, insider activity. I want them all to be strong. But I also want the Power Gauge rating to be bullish. If I'm going to buy a stock, I really like it to be very bullish. But bullish is okay too. And then I plug in up here under universe. You can put in the SP 500, you can put in the Dow 30, you can put in a number of different sorts of indices. But I put in strong industry groups, and that's one of the steps that we're going to be going on through later. But just suffice, and I'll explain it later, but just suffice it to say you want to buy strong stocks in strong industry groups. So of the 65 industry groups, I only want top 20%, which is what this will screen for when I put that indicator in there. And then remember back to that classic bull, it had strong money flow and strong relative strength. So I start out with a universe of 3,000 stocks. By only going to those stocks that are in strong industry groups, I get to 431, and then each time I put in that criteria, it brings it down, down, down to 10. And I literally did this in less than 30 seconds. And I can save this screen of criteria. So I don't even have to plug those 7 or 8 things in. I can just go up and say, give me Sandy's screen. And it has this pre-populated, and then I just run it on any particular day. So I ran this over a month ago when I was preparing for a presentation. So I thought it'd be interesting to see, what's happened to some of these stocks that I had on the list. And let's look at these two. So back on June 14th, I came out with a universe of 10. I could then save this list at my workstation, flip through each chart, so I get a detailed chart on each of these 10. And then I pulled out a few that I felt were of particular interest, that I liked the pattern, put them into my watch list, and would wait and buy them, when and if the right time presents itself. So let's look what happened here. So I put Gibraltar Industries, which is in the building products, very strong industry group. I think it's in the top 5. Symbol is rock. Put this down on your stock idea list. I bought this back in June, and I put it on my watch list in early June because it came on a screener as early as June 6th. So I put it on my watch list. And then remember I referenced early on the Brexit vote. That was when Great Britain voted to get themselves out of the European Union and go it alone in terms of their currency. And the stock market panicked. Not that it really had anything to do with today's stock market, but the stock market doesn't like change, and they hate uncertainty. So there was uncertainty and there was change. So there was massive selling. Now remember what Warren Buffett said, is you want to be greedy when others are fearful. I can do that. So I've had this on my watch list. I was just waiting for the right time. And look what happened here. I get this oversold buy signal, which means it's a dip. Look at this great dip here. It triggered a buy signal for me. It dipped way down. You know, most stocks dropped 5–7% in the several days following that Brexit vote. And I saw that as my opportunity to be greedy. So I bought it here, and I actually just sold it this morning up here when it hit this upper volatility band. This is a good time. This helps with timing. I don't usually wait for a sell signal because those sell signals, those red triangles, don't usually trigger until a stock goes into neutral or bearish category, and I tend not to be holding it at that late time. I like to sell up here when it hits this upper volatility band. This is kind of a range. This is kind of the logical range of the price the stock will stay in. It's like a channel. Think of it as a channel if you're a sailor. You know, think of it as the channel markers. You know, this keeps you inside the frame. So if a stock bumps up here, as it did this morning, this is a good time to say, hey, you know, I've made a good profit on this. I've made 12% in, what, not even 5 weeks, 6 weeks? This is a good time to get out. So I sold it for my 12% profit in 1 month this morning. That's how you can use this system to both buy and sell a classic bull. So let's look at another one, Universal Forest Products. This was on my list, and I go back to my notes from 640. It was on my, I had like 6 stocks on my top list that I was considering to buy that day. This was one of the 6, and unfortunately I bought like 4 of the 6 and not this one. But can't buy everything. So here was the same oversold buy signal that triggered from that Brexit vote on June 24th. You can see that it correlates to this dip down here, but look how everything else is lined up. You've got a strong power gauge rating. You've got very strong relative strength, saying this stock is really outperforming the market. And you've got strong money flow. So, and you got a buy signal. So everything lined up. It was just a question of choices and available capital to put to work. So unfortunately, this is not one that I bought, but I've kept it on my list. I've been waiting for a pullback, but as you can see, the stock has gone straight up. So it's, you know, it's not giving me the pullback I need to buy it. And I guess here it was as good a pullback as it was going to get. Although you can see it never went down where we like to see it go into this under 30 range here to buy. So so this is still on my list, waiting for that pullback. But can you see now your eyes starting to get accustomed to these charts, that you can see the pattern here, that this is, you know, what we would call a classic bull. This is a great stock idea. Put this on your list as well. So just chat in yes if you can, you know, see that it's a good opportunity. Okay, Dino, Eric, Joseph, Doc, Charlie, Kevin, Paul, Naomi, Nancy. Lots of yeses. Okay, great. So that's great. And your eyes will get more and more accustomed. The more you use this system, the easier it gets to see these patterns really quickly. So let's move on to the next screener. A couple of weeks later, another presentation. I ran the same criteria as I did before, and this time I got, it looks like about 8 stocks. I culled through them, and I particularly liked Quad Graphics and Nucor Corp. So I put those on my watch list. Now, Quad Graphics has had a huge run. You know, this stock has been up 182% year to date. And I bought this also with this, actually triggered a momentum breakout signal here on 624. So I bought this as well on this Brexit pullback. You can see the stock pulled back slightly, not as much as the others, but it pulled back slightly, and it also triggered this buy signal. And unfortunately, it already was in this oversold position with huge amount of money going into it, very strong relative strength, and a very strong power gauge rating. So I bought it here, and I still own it. So this stock, you know, has gone up. Where is it? It's around 25 now, and I bought it. What's this? I think it's about 19. You know, about a couple of weeks ago. So, you know, this is how you can get the confidence to rely on this. You know, follow some. You know, before you start buying, just follow some of these stocks. Get confident in looking at these patterns, and get confident that it's going to gear you in the right direction. Is it perfect? No, of course not. You know, nothing is perfect, but it's right. It's right most of the time. I would say it's about 70% of the time. It steers you in the right direction with all of these indicators that you're looking at now. So there's always going to be some surprises, but you know, there's always risk in investing in stocks. But for the most part, you know, this is as good as it gets. You know, as a reliable methodology to help you make better decisions. So NUE is another stock that I bought also on June 24th. If you're following my commentary here, you can see a lot of these stocks I bought on June 24th because that's that watch list that I keep. You know, stocks like this, when I see them on a screener and I think they're interesting, I put them on the watch list. The watch list sorts by power gauge rating. So when I pull up my watch list, I see the very bullish stocks at the top. Since I'm only interested in stocks that are very bullish or bullish, I can comb through those pretty quickly. And if they drop, if their rating drops to neutral or bearish, I don't even consider them. I just leave them hanging and just scroll through the bullish ones. So it can be done in a pretty efficient time frame. That's how I can do this in 15 minutes a day. So I already had my stock list. I knew what I was interested in buying. So when this opportunity presented with this, you know, 7% drop thanks to the Brexit vote, I was ready. You know, I just was ready to pull that trigger. And you can be too. You know, this is how easy this is. So I bought it down here at, well, that was on the 24th as well. And I bought it, here's that, looks like about 46. And then it was upgraded. You know, Barron's reported that Deutsche Bank upgraded it from a hold to a buy, so that accounts for this huge run up here. And I thought, well, boy, this is above its volatility band. Remember I said this is like a channel. You're a sailor, you want to stay in the channel. You might run aground if you leave it. So think about wanting to stay in that channel. I thought, boy, this is, you know, this is spiking up. Let me take this as an opportunity to take my profit because it's unlikely this is going to bump up even further, go outside of this channel. So I sold it up here at about 53, 54, took the profit, you know, a 10% profit in the 10 weeks that I owned this stock. And now you can see that it's pulled back a little bit. It did report this morning, and we do have this earnings overlay that you can see here that shows when that stock reported earnings. This is a whole other topic I don't have time to get into, but earnings can be a really strong indicator of volatility. There tends to be a lot of volatility going around a stock when they report earnings because of the consequence of whether they outperform or underperform the estimates. But in any event, this is a great example of how I knew when to sell. A lot of you said you don't know when to sell. You don't feel confident selling. You hold a stock too long. Another example on when to sell, and this is also a classic bull. You can see it's been strong most of the year, strong relative strength, and money flow kind of not great, but okay, but now spiking way up. This is another way to, I knew to take this profit because, again, this went outside of that channel this morning. So I bought it back here, sold it this morning up here when it hit this upper volatility band. They just reported last night they beat their earnings estimate. Stocks that are bullish, that beat, tend to spike up. That's what it did. And I used that as an opportunity to take some profit. And that's exactly what I did. So again, this is like looking over my shoulder. This is watching as I decide what to buy, how I know what to buy, and when I know when to sell, without waiting for those sell signals. Now this I'll put back on my list because this will probably pull back because it's outside its volatility band. It'll probably pull back. Everything is green. When it pulls back to an oversold position, I could very well buy this stock back. So industry groups. I'm going to move on to industry groups. Research shows that half of a price move is attributed to the industry group that it's in. And just be aware that the average stock in a strong industry group will likely outperform a strong stock in a weak industry group. There are 64 industry groups, and we rank them by proportion of strong power gauge rated stocks. So as you can see here on the industry sort within our workstation, the steel is the #1 industry group right now, followed by oil, home furnishings, coal, etc. When you do the screener on this and sort for strong industry groups, as I do in my screener, it'll only look at industry groups that are in the top 20% out of 64. So that easily screens already. You can also, if you're particularly fond of a particular group, you could go in this way and screen and then sort through all of the stocks, the 14 bullish stocks that are in the steel industry group, and see if any of those appeal to you. What I like to do though is just use the screener. This makes it a lot easier for me. I just plug in that strong industry groups. It only will filter for the top 20% of industry groups, and I ran this yesterday, and I got two that in particular I thought looked interesting, one of which had this buy signal on it. So let's quickly look at this, because this is another stock idea that's it's very current. So I screened for this yesterday, and I thought, oh, this looks interesting. I'm going to put this on my list, which I've done. They reported the other day, and they have spiked up. So looking at this chart, would you say, and you can put this into your question box, would you say this is a good time to buy the stock, or would you wait? And maybe just chat that into that question box if you would. Would you buy the stock now or wait? Wait for a little more pullback, says Dino. Lots of people are saying wait. You all? Oops. Okay. Those of you, there's only a few that say buy. No, you don't want to buy it now. Eric, Pam, Ria, Bill. There's so many of you I can't mention all your names, but there's many, many, many of you that say you would wait. And wait is the correct answer. So why is that correct? Because we said this overbought, oversold indicator, when it's up here, it's spiking up. You don't want to buy it up here. You're going to overpay. You're going to wait for this to pull back to like one of these little dips here. See this dip here that correlates to this dip in price here. This is a little bit of a dip that went here. So in the natural zigzagging of a stock, it's not going to stay up there all the time. It will pull back, particularly when it's outside of that channel. So this is a great stock idea, but make a note that you want to wait for that stock to become oversold. You want to wait for it to dip back down here below that 30 mark, which will give you a better price at entry. Let's look at the second one. I don't even know how to pronounce this. It's a chemical. Inofos Holdings? Not sure. But in any event, I highlight that it's reporting August 1. Stocks that have this type of bullish pattern tend to do very well at earnings and exceed the analyst expectations, which can cause them to spike up. So I'm watching this carefully before August 1st. And also, we have a positive earnings read on it, which means the some of the analyst estimates are coming in over estimates, so that this is likely to outperform when they report. So there aren't any recent signals on it, but I would add this to your stock ideas watch list, IPHS, and wait for this as well to be oversold, because you can see this is way up here. So you want to be paying up here, you want to wait for it to pull back and get it on a dip like down here. Okay, a few more testimonials. I've been using Chaikin for several weeks. I can quickly and clearly see when to go long or short. It has already closed out 2 trades for gains of 70 and 115%. Over the years, I've tried different software packages and programs. Chaikin is by far the most straightforward analysis product I've ever used. And we pride ourselves on being user-friendly and a simple interface to read. So Eric certainly has agreed with that. So I'm going to move quickly to what to sell, so I can see we're already running beyond time. But if you'll bear with me for another 10 or 15 minutes, I'm going to, those of you who are not subscribers, we're going to offer you a special, very special offer at the end. The classic bear is literally the exact reverse of a classic bull. It has a power gauge rating that's bearish, relative strength that's underperforming, and money flow that's coming out instead of in. So it's basically red instead of green. Same Wyckoff pattern, zigzagging, but this time it goes down, up, down. It zigzags down instead of up. Let's look at a few examples. Now, none of these stocks I own, I'm just using these as examples, but if you trade options, these are good candidates for put ideas. Netflix, this was a huge winner last year. It was actually like the #1 stock on Motley Fool's list. So it was a big performer last year, but things change. You can't buy and hold. That methodology really doesn't work anymore. Because if you had bought and hold, you could have ridden this from like 132, all the way down to like 92, which is what it is now. So, I mean, you can see these are these red triangles that are telling you to sell, right before they reported earnings and had this big drop. It triggered a sell signal. I mean, that would have been a great opportunity for a put option, which many of our subscribers took advantage of. Likewise, over here, you get another opportunity to sell. You could put another option in on here. And again, it disappointed, dropped down. So looking at this, power gauge rating has been consistently bearish for almost a year, underperforming the market since February, and kind of in and out with money flow. The fact that money flow now is positive is not enough to convince me that this is a stock I should buy, even though it is oversold, because these aren't here. You want these all lining up to be green if you're going to buy a stock and hold it for a swing trade or a longer term. Let's look at Apple, always the most popular stock. This reported a couple of days ago, Tuesday, and this did something different. I kept this on here because this was it was a 6% jump when I took this slide yesterday. It reported earnings here, Tuesday, and it popped up, despite our fact that we were rating this bearish. So that's why I say, there can be there typically is a lot of volatility around earnings. Sometimes there's a surprise. This was a surprise. This didn't go the way we expected it to go. And you have to be mindful of that not all of these guidances are going to be absolutely perfect. Would I buy this stock now? No, I still wouldn't buy this because of the power gauge rating and the relative strength, even though there's a little bit of money starting to come back into it. But that's the way I would evaluate this stock chart. Another bearish stock, Starbucks. Again, look at the pattern here, look at the sell signals. The short sellers are bullish on this stock, but the insiders are not buying the stock. So they're only going to buy this stock if they think the stock is going to go up. They're not buying. So it's a little bit of mixed messages here between the shorts and the insiders. But in any event, it is a stock that I certainly wouldn't be interested in buying, even though the money flow is starting to come back. So that's the way I evaluate these stocks. These are options traders who have made some handsome returns. Harry here's made $17,000 in the 2 weeks since he subscribed in early February. Moving quickly now to signals. I've been pointing them out along the way, so I'm not going to really spend time on the signals, other than to let you know that there are 6 pairs of buy-sell signals. You saw those little triangles that I pointed out along the way. How do you find them? Well, you can overlay by clicking on this little bell, and this is from the iPad because I did this back in July 7th. You just click on this little bell, it'll overlay this alerts view on any chart. You can do this on the S&P 500, you can do it on your watch list, you can do it on your own stock list, you can do it on industry group list. It's a way to filter and find the most important things affecting a stock price quickly. In this screen here from a couple of weeks ago, you can see there was a momentum breakout on UFPI. That's that United Forests stock. So again, I had an opportunity to buy this a couple of weeks ago. Remember, I missed it on the Brexit vote because I didn't have the cash then. But look at this chart. Everything is like as good as it gets, very bullish. Just waiting for that right time, and it didn't really pull back. Momentum, it was already above its volatility bands, so I thought, well, I'll wait for this to pull back, and I mean, some stocks, they just don't. They just continue to go straight up. So let's look at 3 weeks later. This was the 7th, that momentum buy signal I just showed you on the chart before, and this is where it's gone since then. So you can see this stock just basically defies gravity and goes straight up. It's above its volatility band right now. I guess this is its pullback, which isn't exactly below 30. It's like at about 50. But that might be as much of a pullback as this is going to get. So I'll just have to keep watching this and see if it pulls back a little bit more before I'm paying up for it. That's the way I evaluate it. Let's look at my alerts view now on my watch list today. You can see there's 2 buy signals on stocks that I've been watching. McKesson, money flow buy here. Again, everything looks really nicely lined up, and it is oversold, right? It's under 30. However, if you drop down to split out the expert opinions on the power gauge rating, you can see that the insiders are not buying. Again, it's the flip-flop with the shorts are bullish, which means they're not shorting the stock, which is good, but the insiders aren't buying. So I wonder why they're not buying. So I would like to see that at least go over to neutral and ideally, bullish before I pull the trigger. But this is a good stock idea itself, McKesson, MCK. And one last example, Herman Miller, which triggered that momentum buyout signal today as well, which as you can see here. And you can see this is way up top. This is clearly not where you'd want to buy this stock. You want to wait for it to pull back, but you've got strong, a bullish power gauge rating, strong relative strength, and now you've got money coming back into it. So it's likely that this stock is going to start going to the upside. And I did the drop down on the experts. The shorts are kind of neutral. The insiders are kind of neutral to not buying. I'd like them to be a little bit stronger. So I would watch this stock for a couple of days or a week or so and see if some of those indicators don't turn my way. And certainly wait for this to be oversold. So that's why the screener is so helpful, because I could, the screener tells me, okay, it would automatically eliminate these because they don't meet my criteria of bullish short interest and bullish insider activity. So the screener really is the easiest way to go. If you're looking for stock ideas, just do that screener with your criteria, and then you really have the perfect list for you. So let's recap. The 5 steps to profit. Methodology you trust. We depend on the power gauge rating. You want to know what to buy. You want to buy strong stocks in strong industry groups. You want to know what to avoid. That's those classic bears. And of course, you want to know when to buy and sell. That's the overbought, oversell signal, in addition to the buy-sell signals. But the most important thing is that you take control, and that you take control now. The time is now. You really can't depend on the news source and the commentators that you hear on the 24/7 news channels. I mean, even Kramer gets it wrong. He was talking about EXXI, pushing that stock for months. Chaikin subscribers knew not to touch it because of this power gauge rating, relative strength, and poor money flow for months. He was saying, "Oh, it's good. It's a good time to get in. It's undervalued. It's a good time to get in." The company went bankrupt. So you really have to do your own due diligence, and this makes it really easy to do. We have a lot of financial advisors, as I said, who use our Chaikin Analytics, who use our stuff. Peter here says that Sandy's figured out how to make Chaikin even easier, to find the really good stuff and concentrate on buying and selling only them. I've also decided to get rid of other services I've been using for years because this one makes a whole lot more sense. In other words, it solves the information overload problem, puts everything you need to know about a stock in one place, and is reliable at that. So, Peter, appreciate your testimonial. And then yesterday, we got this from our good friend Steve. Steve's daughter is the one who got married in Istanbul 2 years ago. We went over for that wedding, and we visited them in Connecticut this weekend, he and his partner. And he sent me this yesterday. He said, "You two are the dream team in so many ways. The genius of Mark to create this functional system out of what has always seemed like chaos to me, and the brilliance of Sandy to learn the stuff and present it with such frankness, simplicity, and genuine caring." And his next line is, "I think I can do this too." And you can. Steve, you can do it, and those of you listening, you can do this too. Just follow this methodology. So the methodology that I promised you to find was how to find the best stocks in any market, find them quickly and easily. I mean, depend on that screener to really help you out, so that you become more confident and less fearful. And take advantage, and celebrate with some of the profits that you're making. Think about how you want to go, how you want to spend that money. Would you want to take a trip? You want to buy a new car? You want to put it towards a house? Whatever it is that is your goal. Think about that, and think of that in the context of investing. And then you've got something to work for, and you will get there. The platform, again, is what we call the financial freedom, because it gives you financial freedom, and it gives it to you on the fast track. And it's powered, of course, by Chaikin Analytics. Another testimonial, a fast and efficient process. I had a 90% average return in my first 6 earnings trades using options play. This is the overlay for options. too much material to get into right now, but options basically gives you 3 strategies, 3 recommended strategies. It does the heavy lifting for you. And Joe Bocella, who's our webinar organizer, is giving presentations on this to our subscribers twice a week, how to use it. And the earnings features as well. All very simple trades. Chaikin makes the process fast and efficient, so instead of getting bogged down in due diligence, I was trading. That's what you want to do. Spend your time trading, investing, instead of sorting through Yahoo Finance and NASDAQ.com and all sorts of other places. And you can do it too. You know, I always come back to the confidence factor. Sandy affirmed that I know more than I think I do about how to use the tool, and because she's using it successfully with a similar novice background to mine, then I can too. It was a real confidence booster. And that, as I say, needs to be at the root of your investing. If you're not confident, you're not going to pull that trigger. So I alluded to a special offer earlier on. The Chaikin Analytics sells for $1,950 a year. We are taking $300 off, but are going to sweeten the pot for those of you that subscribe by tonight by adding a special bonus of a free subscription to our new Chaikin Market Academy, which Joe has prepared and hosts. These are 2 really powerful 3 to 4 hour classes that are live that you can go to become what we call a master trader. You'll see how the market works, you'll see how the analytics follow the market, how to use them to evaluate and analyze stocks in more detail than what I was able to show you now, and how you can start using the methodology to start making profits right away. This usually retails for almost $500, but we're giving that to you free when you subscribe by midnight tonight. Now, in addition to, I didn't have a chance to get into so many of the things that the software offers, but it has all sorts of research that comes bundled in with your subscription, one of which is Mark's Market Insights, which many of our subscribers really depend on and wait for that email to come every Sunday night, because it gives you an overview of what happened this past week, where Mark sees the market headed, and very specific buy and sell ideas in it. The other thing I want to point out are our coaching calls. You know, if you feel you need beyond our coaching to get into, well, we have two coaching calls. We have the small group, which you'll get into as early as tomorrow when you register tonight. You'll go into a small group session where Joe or Michelle will walk you through how to use the analytics, how to create your lists, you know, how to sort by filters, how to use the buy-sell signals. It's kind of a quick start, you know, get you started and get your hands on using it. If you feel you need more help, they will schedule a one-on-one with you to go over it and how to integrate Chaikin into your methodology. And then we have these bi-weekly, we call them online forums with our subscribers. So every other Monday, our subscribers are invited to sessions that we find that when the subscribers partake of these sessions and take the time to invest in learning how to use the software, that's when they realize the profits. When they don't take advantage of these coaching and education classes, that's when they tend to not see the results that they want, and they get frustrated. So it's in our best interest to make sure you know how to use it, and it's very important to take advantage of these coaching calls and use them to your advantage so you can start making these kinds of profits right away. This is one of the kind of the freebies that's thrown in. This is the Market Insights report that comes out every Sunday that Mark puts out, and he really nails it. I mean, he really calls the market. He's called it the market right for the last 3 years. So subscribers who've read this and taken his cue have done really well, because he knows the market better than anyone. Bonuses that are thrown into the subscription, the screener that we talked about, the earnings feature. I didn't really get a chance to talk about those, but there's that overlay. You can see when any stock is reporting earnings, which is really powerful knowledge to know because of the volatility surrounding those dates. And the morning insights. This is a morning email that comes out from our chief market strategist about what's happened in the market yesterday, what's happened overnight, where he sees the market headed, and very specific buy-sell ideas as well. So all of this usually goes for $1,950. As I said, we're taking $300 off and adding in, the $500 value of the Chaikin Academy when you subscribe by midnight tonight. So we hope to see you on we call it the onboarding call tomorrow, where you'll be walked through the analytics with Joe or Michelle and get started right away. So you can put these 5 keys and 5 steps to work and start realizing your profits as early as tomorrow. So Joe, I'm going to turn it over to you. I thank you all for staying on, because we did run over time, but I see most of you are still with us, which is great. So thank you again to Adam Mesh for inviting your community from Options Moneymaker, and have a great night.
Awesome. All right, well, thank you very much, Sandy. Thank you, everybody, for attending. As a reminder, this webinar has been recorded. We will be sending out a copy of the recording tomorrow morning. But in the meantime, we would love to have you join our program here, again, taking advantage of Sandy's offer here, $1,650 for a full year to Chaikin Analytics, plus free access to one of our Chaikin Academy courses, which, again, we've received nothing but great feedback on. We'd love to have you in here, especially if you're in a position where you just haven't had consistent results in the market. Again, we have a wonderful program here that will provide you with guidance for what stocks to analyze and, again, where that growth potential is. And, again, we'll get you started as soon as you register for tomorrow's onboard session. So on behalf of Sandy as well as Michelle.
Joe, excuse me one sec. I forgot to mention one thing. Can I just add something quickly?
Go right ahead.
Here? We did type up the list of stocks that I talked about tonight, the stock ideas. So if you want to get that list, just call or email the number that you see at the bottom of the page here, and just ask one of our customer support team to send you that list, and they'll email it to you.
Beautiful. Awesome. So again, plenty more incentives. So again, on behalf of everybody here, please thank you very much for taking the time to join us tonight. Have a wonderful evening, and we will see you tomorrow on our onboard session.